Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be doing an earnings preview for Lucid Group Inc., and they trade on the NASDAQ under the ticker symbol LCID. One of the reasons why I wanted to cover Lucid is because right now we are looking at an incredible amount of volatility in the market, and you can see on Friday, as they closed the day, more than 4% up. And I think that we're going to continue to see quite a bit of volatility following some of the news that's coming out of the Russia-Ukraine conflict. And as I expect that to continue to develop, I think that the earnings plays that are going to develop from this week are going to be primarily market-driven and macroeconomic-driven, as opposed to individual stock performance. You can see that a lot of electric vehicle stocks such as Tesla, such as NIO, and Lucid have had a very tough start to 2022. You can see that for Lucid, they began the year around $40 a share, and they now sit close or just above $26 a share. I think that earnings are going to be incredibly important for the stock, not necessarily related to their actual revenue or their actual fundamental performance. You can see that there is a disconnect between the fundamental performance and the underlying stock valuation, as evidenced by the valuation analysis here available on TD Ameritrade. You can see that the company is currently sitting at a market capitalization, or with a price to sales ratio based on a trailing 12-month basis, of more than 60,000. Now, this is not the first time that we have seen obscene valuations in the electric vehicle maker space, as this company was lauded as a direct competitor to Tesla. Now, I always have a lot of trouble investing in any company that is pre-revenue, and as Lucid continues to develop their pipeline and as they continue to produce vehicles, I expect that these numbers should somewhat normalize. However, you can still see that from an industry expectation, there is a very high valuation in the price to sales space. So the question is going to be is how fast can they grow? Now, what I'm going to be looking for is the expectation associated with the slide that you see here on the screen, where I want to see revenue growth quarter over quarter for the company. So for the Q4 earnings, keep in mind that 2021 was the first year that Lucid delivered any vehicles, and the expectation is that they were not a lot of vehicles, but they did have 13,000 vehicle reservations in Q3, and that order total was more than 1.3 billion. Now they're expecting to ramp up their production capabilities in Arizona, and a lot of that is going to be coming into revenue. So remember that a company or a automaker cannot count a sale of a vehicle as revenue until that product has been delivered. So the question is, are they going to be able to hit those revenue estimates of nearly $60 million for Q4? If you look at some of those fundamentals associated with the company, in particular the income statement, and if we change that to the quarterly view, you can see that they're currently watching zero revenue. So the question is, will they be able to get to 60 million in Q4? What I'm expecting is that we're going to see a revenue miss, but hopefully production capabilities beat. Although I do have concerns on production capabilities as well as future pricing, notably due to the fact that we are seeing increasing numbers of electric vehicle makers, whether that is a company like Tesla or some of the traditional automakers like GM and Ford, complain about some supply chain issues, and I don't expect that to slow down in the immediate future with the ongoing conflict in Eastern Europe. So the question is, are we going to see that impact Lucid Group's capabilities to further manufacture vehicles? The only expectation that you can really have in terms of stock growth is not necessarily going to be dependent on fundamental analysis, but how you anticipate investors are going to portray the fact that the company is continuing to grow their product and they may continue to have large revenues in the future. At this point in time, I do think that it's beneficial to the company that they are sitting on a significant amount of cash. They also have some wealthy backers in the form of the Saudi Group, as they continue to fund or have a ownership of Lucid Group. So the question is, as they sit on this large percentage of cash, you can somewhat feel better about the very large valuation. The question is going to be is, are we going to see a return on that investment as that cash gets spent and as that market capitalization continues to decline as they have over the course of the past or the beginning of this year? So at this point in time, I am personally not an investor in Lucid Group, and I don't plan to be at this point, just due to the fact that there is still going to be a lot of volatility in the EV space, And I think that there are negative macroeconomic indicators associated with pre-revenue or pre-profit companies, particularly in this high-growth space. That being said, I'm open to positive criticism over the analysis I've presented here. And if you find this content helpful, please leave a like and subscribe, and we'll check back in after they announce earnings this week. Thanks. Talk to you later.